good afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me is Aisha Faridi, and the closing trades are looking much better than what we started off the day with, because at least we are seeing a bit of a green when it comes to the Nifty. It's managed to go past the level of 19,400, but it's not a runaway rally or anything. We continue to face a bit of resistance when it comes to the upper end of the market breadth and fairly range bound for the trading session. As far as the markets are concerned, it's the broader markets which are showing quite a bit of an outperformance, because metals, they continue to weigh on the market. So the global weakness and the headlines that we have been getting from China are not too impressive. So that's weighing heavy on the metal index. Banks too are underperforming. So it's down 0.3%. In fact, if you look at the last 8 trading sessions, 8 out of 10 times the bank Nifty has closed in the red. So that continues to be a bit of a pain point for the markets. The other pressure points are Reliance Industries, because that stock is down 0.4%, and then you also have some sort of weakness coming from HDFC Bank, ICICI Bank, etc. Quickly, let's talk about what's happening in terms of the Asian markets as well, because they are down anywhere between 1–1.5%. But European markets haven't had a bad start. They've opened a bit of mixed cues coming in, and perhaps that's the kind of rub-off impact that we're getting from the global markets right now, because the pre-market rates from US are okay, and Europe too has started on a bit of a green note. So things are looking incrementally better, but again, no runaway rally of sorts.
No runaway rally. In fact, it's China's Tencent which has managed to miss the expectation, even though there was hint of the fastest profit recovery since late 2021, when China was in the slump of COVID lows. But that said, yes, like Anisha mentioned, it is the Asian screen which is looking a little shaky. But our markets have been quite okay. It's a very narrow band, actually, to be honest, from the lows or the session highs. But yeah, these are, that's pretty much the index in trade for you. The key pressure points, like we've been pointing out, thanks to the China impact, it's the metals pack, which is at the deep down in the red. Pharma, realty, power and technology are the ones which are seeing some dots of green. But let's talk about those individual names which are actually holding out. And once again, it's the broader market, which is much more lively than what the benchmarks have been doing. You've got a Cochin shipyard, Midhani, Garden Reach. They're all the ones which are holding out very smartly in trade, with reports indicating that Germany and Spain are in contest for a $4.8 billion deal, and Indian officials are evaluating competing for these bids. There's been a couple of block trades as well: Honor Religare, JSW Energy and Interglobe Aviation, like we reported earlier today. Remember, we were the first ones to tell you that a 7.6% equity could be changing hands, and that the Burman family could be the likely buyer. That block deal definitely has happened. JSW Energy as well, GQG has picked up almost about 1.5% stake. And then Interglobe Aviation, wherein reports were indicating that the Gangwal family is most likely seller in that block deal of 3.8%, which happened earlier today. That said, the new kid on the block, SBFC Finance, that's made a solid debut, eased off a little bit from the top. Remember, it started off with a 40% premium to its issue price, and I stand corrected there. It's even perked up with the market rise, 61% and still counting higher. That is SBFC Finance in trade for you. But let me take it across to Kunal and Naresh and find out what is it that they're making of the recovery. Kunal, do you think that after the recent consolidation/dip that's played out in the market, are we headed in for a dash upwards?
Well, I would not say a dash upwards, but then I think some sort of a day like what we've seen the last 2 days, I think Monday and today, where we've seen an initial gap down or a selling for the indices, and then a steady recovery or a gradual recovery. Even that's an ideal state of the market, because that initial sell-off generally and the recovery post that generally gives you a lot of opportunity to try and trade stocks which have fallen down, and the recovery into many of the stocks and sectors is far more stable. Like what we've seen today, for example, for the banking index, good recovery of almost 250 odd points for the bank Nifty, 100+ point recovery on the Nifty, and that's added towards recovery for many of the individual stocks and sectors. So I think that's the ideal kind of a market which you're looking out for. And at the same time, we have not broken below that major support of 19,300 on the Nifty, not even close below those levels. So when we have such kind of a scenario, we'll take it with both hands, expecting that the stock specific action would continue and the index would remain largely in this range or a flattish kind of a zone.
Sure. But let me actually bring on board my colleague Prakash as well, because we do understand that there was a cabinet meeting earlier today and there are a whole host of announcements that have come out. But two specific stocks that are reacting to the news flow are JBM Auto as well as Electra Green Tech. Let's pull up the two counters, and the reason is that the cabinet has approved the expansion of the electric bus service project. So Prakash, why don't you begin with that and tell us what the details are, and then we can pick up what the other announcements are likely to be?
Yes, the Union Cabinet meeting has just concluded, and we are learning from our sources that the Cabinet has taken some important decisions today. And the first one is with regard to, electric bus services project, which is going to connect 170 cities in the country, and where the electric bus services will be started. And for that, the government has approved a very comprehensive project worth rupees 63,000 crore. Wherein the central government will contribute around 20,000 crore, and it will be completely a PPP project with the participation of private companies, and the state governments will be there. So it's a very comprehensive project where the government is going to contribute around 20,000 crore. Apart from that, one other important decision that the cabinet has taken today is with regard to railway sector. Cabinet has approved the proposal that has been submitted by Railway Ministry for extension, modernization, and a doubling of some railways lines. As per the information we are getting from our sources, that the cabinet has approved 7 railways lines that will be modernized and extended going forward, and that will connect northern part of the country to central and western part of the country. And for that, Cabinet has approved around 24,000 crore that will be given to Railway Ministry to complete these projects on time. So it's a very comprehensive decision that will help railways to modernize its network. And the third important decision that has been taken by the Cabinet today is with regard to Vishwakarma scheme that was announced by the Prime Minister yesterday from Red Fort. The Cabinet has approved around 15,000 crore that will be given to the concerned ministry to operate this overall scheme going forward.
Point taken. Thanks so much for joining us with respect to that. But yes, the stocks are definitely seeing a reaction. So let's take Naresh's view as well on those. Naresh, would you be a buyer in either of these names, Electra Green Tech as well as JBM Auto, and even the railway names that Prakash was highlighting, that there's some extension of capex there as well?
So I would be a little cautious here in terms of Electra as well as JBM Auto. The stocks have already rallied quite a bit. So went from 700 to 1400 Electra in this move. Today also, after correcting from 1050 to 1250. The viewers will get sideways in both these names, overheated in the near term. So the risk reward is not great. So would avoid both these names. On the railway side, I continue to like only one stock out of the whole basket, which is RITES Limited. That's the only stock which has underperformed the whole basket. We've seen private as well as PSU, both railway stocks do well. RITES is just up 10-15% from the highs of 2022. And we've seen this happen in the shipyard space also. We saw Mazagon Dock doing well. In the last 2 days, we've seen GRSE and Cochin also catch up. So the only catch-up trade left in railways is RITES, which could go towards 550, 600.
Okay, that's the take coming in on some of the buzzing stocks. Keep your lookout for JBM Auto, Electra Green Tech, or for that matter, even Tata Motors. These are stocks where I don't think the upside is captured yet. You're continuing to see an uptick there. But time for an 18-hour exclusive, and we've got Bhavish Agarwal, the founder and CEO at Ola Electric, talking about Ola Electric's journey, its key launches, view on government tampering with EV subsidiaries, and plans to delist, or rather list, on D Street. Here's his exclusive chat with Nikunj.
2 years ago, we launched our first product, the S1 Pro, which has had tremendous success in the market. Just in 2 years, we've gotten to 40% plus market share in the EV two-wheeler segment. And yesterday, we announced what we call the whole S1 lineup across all price points in scooters. So now we believe that there is no more excuse in scooters for any customer to buy ICE. It is time for ending ICE age in the scooter segment.
But Bhavish, the entire EV scooter space or the two-wheeler space was off to a great start. It was neat of the hour. It was also a unique appeal, which in a sense the millennium was getting, and especially the eco-friendly millennial. But now, given that there is a bit of a reversal in terms of the duty advantage, especially because of flames, what is happening to the affordability and this entire price-sensitive market like India, where, this entire environment appeal is great, but ultimately it comes down to Sasta Sundar Tikau.
Yeah. See, Nikunj, I think that's very important. India is a market where price is very important, and not just low price, but great value for price, right? And that's where our focus on yesterday's announcement was. If you see, we started with a premium scooter product, which is the S1 Pro. And yesterday we announced a whole range of products at different price points, starting from 80,000 rupees going up to 1.5 lakh rupees. So now we have a portfolio starting from absolutely at the entry level of scooters, equivalent to the ICE price point, and going up to 1.5 lakh rupees, which is our premium product, which is frankly the best scooter money can buy. And we believe with this kind of a pricing, consumers will find EVs fundamentally better than ICE vehicles, because not just is the upfront price now equal to ICE for our EVs, but also using an EV is so much more cheaper than using petrol vehicles or ICE vehicles, because petrol rates only go in one direction, whereas electricity is much more accessible and cheap, and the EV vehicles are much more efficient. So the running cost of an EV vehicle is roughly 1/10 or lower than a petrol vehicle. And now, if you buy an Ola EV, every month you save 2,500-3,000 rupees. So in a year you save about 30,000 rupees. So it's buying an Ola EV or buying frankly any EV. Not that there are many at this price point, but buying an Ola EV actually allows you to do better for the planet, but most importantly, do better for yourselves and for your wallet. And I believe, Nikunj, to your earlier point on legacy players, right? Now, they might comment on the sidelines that EVs are not the future or that EVs are not price competitive. Yesterday, we have changed that. And now actually the gauntlet has been thrown to them to react and to bring exciting EV products, competitive EV products to the market and compete. Because it is quite clear that ICE is over in scooters. And what we also did yesterday, Nikunj, is we showed our scooter portfolio, but we also painted a vision and a roadmap for our motorcycle segment. So we are actually moving the game from scooters into motorcycles for the next couple of years.
The fact that the FAME subsidy has been discontinued, is that indirectly good news for Ola? Because you are a market leader, and typically when the subsidies are reduced, the market leader always tends to gain much more in terms of market share and dominance.
Nikunj, firstly, I want to actually acknowledge the kind of visionary work the government has done over the last many years, where government has set a very clear vision for electrification of India. Government has set up a very, very enabling policy and incentive environment. This is what countries which have a strategic vision like China, US, Europe, they have also done it in their ecosystems, and the Indian government has also been very forthcoming, visionary in terms of doing that. And now, as EV penetration is increasing, especially in the two-wheeler segment, the government will slowly taper off subsidies, which is, I believe, absolutely okay. The onus is on manufacturers to truly up their game in terms of having the capability in technology and manufacturing of new age components like motors, battery packs, etc., electronics. The scale of manufacturing and supply chain, as well as the technology, is required to bring price down. And I think the challenge is to us manufacturers to do that. And we have from day one been doing that. We've actually shown our factory to many people. Some of your colleagues might have visited, and they've seen what the kind of scale we've built and the kind of manufacturing depth we have created across multiple components. And that's what's allowing us to bring price down and offer consumers a whole suite of options at different price points.
You mentioned something very important, and this is a delight for consumers, which is that directionally you managed to bring the prices down. Do you think, given that the entire two-wheeler EV is still dependent on that important battery storage, and battery storage rates will come down, the natural direction for EVs in India is actually south and north-north?
Absolutely. And if you look at India's, even before India, the biggest cost component in EVs is the cell. And the cell today is all imported from different parts of the world. We buy from Korea. And cell is almost 1/3 of the cost of the EV. In some cases, 40% also is the cell. Now, we took a lead 2.5 years ago to start making lithium-ion technology and cells and manufacturing them here in India. And we are the most advanced company in India to be building lithium-ion technology. We are also in the process of setting up our own gigafactory. Phase 1 is going to be 5 gigawatt hours. It's India's first and largest gigafactory. At full scale, the gigafactory will be 100 gigawatt hour in one single location, one of the world's largest gigafactories. And by early next year, we will actually make the gigafactory operational, and we will start consuming our own Indian manufactured cells. And that's going to be a very important initiative to reduce cost further, but not just cost, make sure we are self-reliant on our energy requirements. Because if you see the paradigm on energy is moving from petroleum and mining and refining into material sciences and technology. So we in India need to build our own strength and capability and technology to build into this future paradigm on energy storage.
Can I safely assume that Ola Electric will only go public when you are ready to report profits, not before that?
So Nikunj, I will not comment on that specifically, but like I said, whenever we decide to go to public markets, and like I said, our business model has evolved very well, faster than I expected. So logically, we will also come to market sooner than we had originally thought. We will have a very good set of financial numbers also to show the market.
Well, holding up all right. We are just toying between that, red and the green right now, but at least holding on to 400 rather, for what it's worth. In terms of the top gainers, of course, it continues to be the entire shipbuilding theme. So, Cochin shipyard, a Garden Reach, a Mazgaon dock, all are sitting with hefty gains. And in the last few minutes, we have seen that perk up on the likes of Electra Green Tech as well as JBM Auto. On the losing side, not many names, to be honest. It's just Crompton Consumers that continues to be on the back foot. Hindustan Copper, which is a result reaction. So some of these names are coming under pressure, and incrementally I'm just seeing some pressure on Coforge. There's no incremental news flow there, but nonetheless that stock has seen a cut of almost 4%. So the entire strength which was there in the IT sector throughout the trading session today is getting a bit undone. But let's try and understand what the market view is. We have with us in the studio Mr. Mehul Bhatt, the founder and chief investment officer at Oyster Rock Capital, joining us. Hi Mehul, thank you so much for making time speaking with us. What's the market view right now? Because while it's not a runaway rally that we are witnessing, we are quite a bit off from the kind of March lows that we had seen. So a solid recovery in the last 3-4 months.
Yeah. So I think if you take an outside-in view of India, it's never been this good for the last 20-25 years. The macro situation and the way India is being recognized in the world is unprecedented. Manufacturing, which was in the background, is now coming to the foreground. You're seeing, every morning you open a newspaper, you're seeing, full page Apple ads and many of these, and these are being made in India. So I think manufacturing is now coming to the fore, and that's a very important piece in the puzzle. Rains have been good, but I think markets are in a state of predicament. So they are neither insanely expensive or they are not cheap. And I think going into election season, we think that there will be some opportunities for people like us who are more value conscious when we are buying stocks, that it will give us opportunities to actually buy stuff at more reasonable valuations.
But what would it be? Would it be more of the same, bunch of financials, manufacturing as the large theme, utilities?
So I think before that, if you see the rise in the last few months has been quite democratic, in the sense that a lot of stocks have gone up, a lot of sectors have done well, and it's not like 2007 where infra and cap goods and those stocks did very well, or 2000 where tech did well. So to that extent, I think it's a good situation to be in for us. Having said that, there are pockets of overvaluation, and let's say if you were to buy now, then investors will have to temper their return expectations, because at these valuations, I think that's the only negative, if I may use the term. But otherwise, I think companies are doing well. So if you look at for example the corporate mood, if you go back to 2019, it's 180 degrees opposite now. Balance sheets are much better. They've cut costs significantly in the last 7-8 years. Growth, capacity utilizations are at interesting levels. So I think if you put all that together, so if you combine the whole macro and the micro story, it looks very good. The only thing that is a little deterrent right now is valuations. And if you look at, if you were to break it up by sector, then like financials look, if you asked people like us who, are, not going to buy very expensive names, etc., then I think that's the first port of call. But a lot of them are cheap. I don't think the growth rates that we saw in the first 9 months of last year will be repeated this year probably. But their valuations still remain attractive. But most of them are overowned right now. So, and I think that, probably caps some of the upside. Pharmaceuticals look interesting. And we've seen some recovery in earnings and in stock prices. But early days, the US pricing seems to be getting better. And I think that is what is showing up in many of these names. If you look at, autos still look interesting, auto ancillaries look pretty interesting. I think cap goods engineering, while growth is phenomenal and a lot of these guys are doing very well, we have to be cautious in terms of valuation. So where the numbers don't come, the market's been quite discerning. So as soon as we've seen good numbers, stocks are up, 15 and 20%, and it's the opposite when the numbers are not interesting. So for us, we are looking at opportunities. If you bucket it like in 3 parts like we do, which is value, so you don't see a lot of very cheap names unless they are cheap for a reason, and something's changing, only then it's worth hunting in that zone. But the special sits as we define them, which is wherever there's a change. So there are a lot of interesting opportunities where companies are going from commodity to value added, or they're going from B2B to B2C, or in some instances there are demergers. These are good hunt zones for guys like us, and the long-term compounders have remained very expensive. So I think there was a momentum trade in quality in the last 4-5 years, and what was 65 times went to 100, 110 times, and it's all now back to those levels. But I mean, how do you make money buying at those prices in general? So there will be one of opportunities in, especially in some of the multinationals, etc., where they will do well for different reasons. But I think those are not pockets where we will hunt unless they are going through a troubled time, or something is amiss, which is what makes them unattractive to the market, and potentially interesting for us.
So highlight some of these special situation names where you would value hunt.
So I mean, I can't talk about specific names, but companies where we've seen management changes, or we've seen results being below expectations. These are places where markets have been quite brutal, and when they are trading at low teens or low double-digit numbers, these are places where I think there is an interesting hunt zone. So in the IT sector, for example, whether you take core IT, so some of the mid caps have done really well, and because they have niches in certain areas which have done very well. So or IT distribution businesses where some changes have led to, so like a lot of this whole work from home, moving back to office has created growth rates which are lower than management anticipation or investor anticipation. So I think we've seen some of those prices become interesting now. So those are places where incrementally but cautiously we are buying with new money.
Right. Okay, those are some of the ideas coming in. But Mehul, just to take that point forward, where is it that you want to have water? Please go ahead. Yeah, sure. I'm just going to mark a couple of these buzzing stocks. Indiabulls Housing, Escorts, Piramal Enterprises. Tata Motors, by the way, has now climbed up a good 2.25% as we speak. It's sitting at the peak of the day, 621 thereabouts is where that stock is. But since we're talking about buzzers, where is it that you find froth or overvalued pockets?
So I think, like I said, in many of these engineering cat goods names, valuations are ahead of what earnings would justify. So basically what the markets are telling us is that they're expecting an earnings rally in India for next many years, and if you buy at these valuations, obviously you have a lower expected return if all goes, even as per expectation. So I think, these are times when, the worst mistakes are made in the best times. And, that's something that we worry about every morning when we wake up, that, are we going down the quality curve? Are we buying names which in a normal environment we wouldn't be buying, but today we are succumbing to buying those because of valuations only. And I think those are things we need to be cautious about, because from these prices, unless your thesis plays out as you anticipate, it's going to be hard to make money. And if you see the situation today, small caps are more expensive than mid caps, and mid caps are more expensive than large caps in general. And that makes it harder.
True. Yeah, it's definitely hard. It's not as easy as it was 3 months ago, because there's a lot of froth in the market as well, and there's a lot of catch-up that has happened. So thank you, Mehul, for joining us and making time. But for now, I just wanted to mark a few stocks. Lupin, for instance, that one has seen quite a bit of spike. There was an incremental news flow that the stock has got approvals for one of their drugs, Metoprolol, and they are going to manufacture it in the Pathampur facility. They have an estimated annual sales of $305 million in the US. So on account of that, that stock is definitely seeing a spike, almost a 3% gain coming in. And of course, if you look at the YTD chart of Lupin, that will tell you that stock has done rather well for itself. And after the earnings as well, we had seen a bit of a re-rating. Separately, it's JSW Energy that continues to trend higher. So after GQG Partners bottomed yesterday, there was another block deal today. So that stock continues to see quite amount of buying. And then the other one is Indiabulls Housing Finance. It wasn't a great set in terms of the quality of earnings, because the OPEX costs continue to be on the higher side. It's just one-offs that actually supported the earnings. But from the lows of the trading session, that stock has moved higher. And VIP Industries too, from the lows at least, it's seen quite a bit of perk up despite that MD resignation happening. So buying really continuing for that one as well. Stock sitting with a gain of around 5%. Time now for a quick break on the show. But before we do that, let's take the closing strategies from our chartists as well. Kunal, you go first.
Well, the Piramal Enterprise is something which looks attractive. I'm bullish on the stock, sub the 900 mark, now at 1050 levels. Looks attractive for a swing breakout trade from a short-term view.
Okay, Naresh, what about you? A cement name, I guess?
Yeah, so that's Ultratech Cement, which has shown a strong reversal candle today. So could see some follow-up back towards 8400. So that looks interesting.
Okay, time now to slip into a very short break. Take that breather. But when we come back, we discuss the metal space at length. That one is a bit beleaguered. We'll try and decode why.
8% block deal on Adani Power. That's a sizable one at that. The stock a little bit under pressure, holding around those 281 odd levels. The Nifty definitely has staged a meaningful comeback. We're now marginally in the green, in fact, at the session highs, just about rearing to touch that 19,500 level. Having said that, the one space which continues to be down and out is the entire metal sector. So let's try and understand that a little bit better. We have with us Rakesh Arora joining in on the show right now. Rakesh, hi, great to have you on ET Now as always. Rakesh, is the buzz around China and the growth, concerns there now with China cutting the key policy rates as well? Is that the real concern for metals this morning or afternoon?
Yeah, so that has been the concern for quite some time now. And now it's coming out that the misery that housing sector in China is facing is much deeper than what initially people thought. So it will take much more than just the rate cut, which Chinese bank has done to revive this sector. And even if they are able to, it is not going to be anymore the growth engine that we have seen in the last 15-20 years. Almost 25% of commodities demand used to come from Chinese housing sector, and that engine is now starting to struggle. So from a commodities demand point of view, I think this is going to be a little bit of a headwind, and that is what is really reflected in the metal stocks today.
But given the fact India is a large commodity importer as well, doesn't that come as a good news as well in terms of India being a commodity user? Sure, of course, for metal stocks that's bad news, but overall, what do you think the impact could be?
Yeah, definitely, any kind of a disinflationary environment coming out of China would help not just India, but the rest of the world also, which is fighting inflation. So I think overall for the market, it's good news if commodity prices stay low, and companies will be able to benefit from higher margins. But as you rightly said, metal sector, it's bad news.
The investors right now when it comes to the metal stocks, is there any pocket, whether it's steel or, copper, aluminum, any other facing sector that still looks good for an investment, or it's time now to book out, and whether it's your losses and profits, just take it home?
So, while China is 50% of most of the commodities, so the demand impact is going to be across all commodities. But having said that, we have a slight bias for non-ferrous space. The reason is, aluminum, copper, they have very low inventories in the system. And whereas spending on renewable side of the economy is still going to happen. So probably non-ferrous is the way to go ahead, preferred over, steel, etc.
But Rakesh, purely from an investor's point of view, would you say the advice is to stay away from metal stocks? And do you see a prolonged bout of weakness in the names?
So, see, if you see valuations also are not that supportive. Already stocks have run up, and in fact, they didn't really correct that much when things were going bad. So valuations are not supportive for investment into metal stocks right now. And number two, we don't know, how long these headwinds are going to last. I mean, obviously, we are past that bull cycle for last 15, 20 years, which was driven by China. We are now into that in a declining phase. And the second best economy is India. And India is only like 5% of global demand, 10% of what China is. So India, whatever rate it grows at, can't really replace China. So best days for commodities are, I think, behind us for quite some time now.
Okay, so the peak is already behind us. The valuations are not very supportive. So take your pick. Maybe non-ferrous is a better space versus ferrous. Thank you so much, Rakesh, for making time and speaking with us. Appreciate your view as always. But time now to welcome on board Sudeep Bandyopadhyay as well to talk to us about the markets. Of course, metals is one space that we have discussed in detail. So why not talk about one of the leaders of the market today, and that's the entire real estate basket as well. Again, there's no incremental news flow, but the likes of Lodha, Phoenix, DLF, they're all doing quite well. And Sudeep, time and again, we keep on getting these videos and, news flow around how one of the launches was made and it was completely sold out. Do you think it's just a bit of euphoria, or there's a genuine demand as well when it comes to real estate right now?
Well, Anisha, I think real estate sector is in a sweet spot. If we take a view of medium to long term, I think the sector will definitely reward investors. Short term, there can be some challenges here and there, and they may be company specific also. But by and large, it's a secular growth story for medium to long term. Now coming back to these marketing videos, I think we have to take them with a pinch of salt. No need to get really excited by seeing the marketing videos. But the fact remains that the demand is strong. There is urbanization happening. There is demand for slightly larger homes. There is also demand for people moving from rented apartments and buying their own property using housing loan. In spite of the fact that housing loan costs have gone up, I think it hasn't affected the housing demand. We also must not forget that beyond the residential part, the commercial part also has started picking up. There are pockets of challenge, but by and large, I think commercial also has started doing good. Most of the metros, we are seeing a resurrection of demand. Also, we must also put together the fact that most of the housing, most of the real estate companies have cleaned up their balance sheets. They have got the tailwind because of this GST, RERA. So the entire sector has got more organized, more corporatized, and more, how should I say, trustworthy. So the investors are trusting more the sector and the numbers coming out from them.
Right. Sudeep, what is your strategy right now? Just wait and sit it out because valuations pretty much across the board are looking rich?
Well, Aisha, it does look rich, but there are pockets, there are companies where the valuation is looking attractive even now. And we have been advising investors to, get into these stocks and these sectors. I can talk about a company, Reliance Industries, which I've mentioned. We strongly believe that there is significant upside potential for a long-term investor in Reliance through value unlocking of multiple businesses like geo platforms, retail and green energy in the coming days. We've seen the financial services bit play out to an extent through demerger process, but this is probably just the trailer. We'll see much more going forward. We also believe that some of the infrastructure and construction sector stocks, whether it's a NCC, whether it's a national an NBHC, or some of the power stocks like NTPC should continue to reward shareholders in the long term if they are bought even at current levels. We are advising investors to be careful in a couple of sectors, particularly defense, where we believe the valuations have reached a level where the margin of error is extremely limited. We are not saying that these companies are not good or they will not do well over the years, but the fact remains that the valuation definitely, as things stand today, looks stretched, and it's better to wait and watch. Let the time correction probably play out before one ventures to buy into these stocks.
You know what, let's pull up the chart of JSW Energy, and not just a 1 day, 1 month, 1 week chart, but a 5-year chart of JSW Energy. And then you'll see that at the start of it, the first 2-3 years, the stock was actually in that 60 to 70 rupee range, did not do anything at all for a couple of years. Then it saw a massive re-rating, went on to the levels of almost 400. From there again went into a bit of consolidation, and now it's perking up and reaching those levels again. So look at that chart. For the longest time, it used to be 60-70 rupees, completely got re-rated, and it seems like there's another re-rating of sorts happening of that stock. I know Kunal is already very bullish on the counter. He's expecting 500 and plus levels on JSW Energy. But fundamentally speaking, Sudeep, do you track this one closely? Any view?
Well, I think the excitement we are seeing now is because of GQG acquiring shareholding there. When a large investors acquire a significant number of shares in a counter, there is obviously some excitement. Overall, I think, as you rightly said, Anisha, the 60-70 level, it deserved a re-rating, and that has happened. I think at this level, after such kind of movement as we have seen in this counter, it is a bit risky for a short to medium term investor to get into it. From a long term point of view, I think there's fundamentally nothing wrong and one can get into it. But it may be better to wait and watch, let the excitement settle down a bit, then probably look at acquiring.
Okay, that's JSW Energy. That's another buzzer in trade, in today's session. The other one, of course, is Indiabulls Housing too. Let's just mark that stock because that's been really holding very strong today. Of course, reacting to its earnings, Indiabulls Housing is now scaling higher by about 5.6% or so. Kunal, would you recommend a trade here?
Well, ideally, I would have, not traded this counter because over the last 2-3 years, then the question is lack of participation from the other stocks from the auto pack, the likes of Maruti, Hero MotoCorp, which is still struggling largely. On Tata Motors, I would actually expect 750, 780 as a near-term target, say with a time horizon of 3 months or so for the stock. My long-term targets are quite bullish on the stock, so would maintain the stance on Tata Motors.
Okay, Tata Motors, that's the word coming in. Long-term targets are quite strong. But quickly wanted to get a word from you, Sudeep, on the entire auto space. Would you play through the, the main passenger vehicle and two-wheeler names, or would you go through the auto angs? Because right now, of course, you have a JBM Auto, a Minda, Electra Green Tech, even other names, Bharat Forge, etc. They've all shown decent amount of earnings, even Suprajit Engineering and the other smaller companies. What's the best way to play this, you believe?
Well, I think the excitement we have seen in the four-wheeler, two-wheeler space leaves a very little opportunity or margin of error. So I will still like to continue to play through the auto ancillary space. And we believe that there are still opportunities. You mentioned Bharat Forge. We like Bharat Forge quite a bit. And I think, it's just started showing positive results, at least in the performance side. Stock market probably still yet to re-rate it fully. Also, one must remember that inside Bharat Forge is a defense play. They also supply in a decent way to the defense industry, and there are benefits of defense make in India, which Bharat Forge also will get. So that's one stock we have been positive on for some time. Apart from that, I think Samvardhana Motherson can definitely be looked at. The kind of bouquet they have created through acquisitions is impeccable, and it definitely can be bought from a medium to long-term horizon perspective.
Okay, so that's the best way to play the auto angs, Bharat Forge, Motherson Sumi, a couple of names that Sudeep likes. But on that note, we let you go, Sudeep. Thanks so much for making time and speaking with us. For the markets today, it has been an all-right trading session because we're at least ending at the session highs or just off that level, to be honest. It's 19,456, so not a bad close at all, given the kind of weak handover that we had from the US markets. The Asian markets were down 1.5%, but we have held out okay. And especially the broader end of the market, it's the mid cap and the small cap, which again have managed to show quite a bit of outperformance. The banking index, yes, has recovered from the lows of the trading session, but that continues to be on the back foot. So as we highlighted earlier, 8 out of 10 sessions, that index has gone home with a bit of a red color. The advanced decline ratio has been okay. And in terms of the sectors, we started off the day with most of the sectors being in the red. That's completely turned now. There are only 3 sectors which are going home in the red. It's banks, financials, as well as metals, which have gone home with a bit of a cut. But on the gaining side, you have the media pack doing quite well. So Nazara Technologies just announced an acquisition of an Israeli gaming firm. That's however 5%. You also have names like Z Entertainment and Dish TV doing all right. From the real estate pack, right from a Lodha to a DLF to a Phoenix, all have managed to report good gain for themselves. Lupin, that drug approval coming in, and that stock inching higher almost 3% on an intraday basis. And talking about more stock-specific movers, of course, you have to watch out for those large deals that have been happening, whether it is a JSW Energy or a Religare or even other names for that matter. We have seen quite a bit of move on that. The entire shipbuilding space, Cochin Shipyard, Mazgaon Dock, Garden Reach, these were the big buzzers. And then the cabinet decision coming in on the electric buses, that had a very good impact on the likes of JBM Auto and Electra Green Tech, because most of those stocks soared as much as 5 to 10%. Some other big movers also included the likes of Kalyan Jewelers, VIP Industries and JSW Energy. So good run for all of them. Even Indiabulls Housing Finance, for that matter, as we have been highlighting, managed to close in the green. Nazara Tech, Minda, these are some of the other names. On the losing side, Uflex, weak results coming in. So that's how it got punished as well. And Crompton Consumer as well. A couple of downgrades coming in, and ditto can be said for Hindustan Copper, going home with a cut of almost 6%. So that's how we're ending the trading session, 19,446 at the index level. But with that, it's a wrap on this edition of Closing Trades. Stay tuned for more on ET Now.